What's up, guys? Happy Monday. So we are just about 1 week away from Christmas, which means also the markets are going to start slowing down, at least the traditional finance markets, because people are going to be taking time off over the holidays, which leaves us with very thin liquidity over the next 2 weeks or so. Now, obviously, the crypto markets are open 24/7 and they will remain to be open 24/7, but I do think that's also going to remove institutional type players from the crypto market. So we're also probably going to have a lot lower liquidity in the next 2 weeks, which could either mean we're going to just flatline for the next 2 weeks, or they could use that low liquidity to really move the markets in a certain way. So let's go have a look at the charts. And of course, if you are new to the channel, welcome, subscribe to the channel down below. And if you do appreciate this video and you like the content, please smash the like button, give it a thumbs up, helps the video get out to more people. So what we have here on the weekly chart, you can see Bitcoin is currently trading at 16,700. We had a very nasty looking candle as a weekly close, and nasty for the bullish scenario, because this type of candle is usually a bearish candle. It is known as a shooting star candle, and basically what it means, a type of candlestick that forms when the security opens, advances significantly, but then closes the day near the open again. Basically what you need to know here, the key takeaway, it occurs after an advance and indicates the price could start falling, and the formation is bearish because the price tried to rise significantly during the day, in this case during the week, but the sellers took over and pushed the price back down towards the open when it closed. So you can see that is exactly what happened here. We got this push after a bit of an advance. You can see we had those two green candles. We had a very small candle. We had that big push up, but then the sellers stepped in, pushed it all the way back down, and then we closed back here. And that is just basically usually a bearish candle that increases the chance of downward continuation. Now it looks even more bearish when I put my annotations back on this chart, because what you can see here, we went and retested basically the breakdown level over here around 19. We didn't even get to 19,000, went to about 18.3 or 18.4, which was also around about this level over here, just approximately, right? So this is bearish because not only because of the candle, the way it looks and how it closed last week, we had an attempt to retest this. If we could have gotten back above this level, things start to look interesting for the bulls. But now we got there, we got rejected back down. Ethereum also, I'll show you in a bit. This is not good. It means the bears are defending, the bulls have no power. And that means, like I've been saying over the past weeks, is we still have this fair value gap over here at around 12,000. This is a much stronger support than where the price stopped here at about in the mid 15s, because you can see there's basically no historical activity. It was just the one-time peak here in the 2017 bull market and then the move up here. Other than that, there's no activity between this 12k level and this 19k level. So we finally broke below 19k, we went up to retest it, got rejected, and now it is likely that we head lower. The only thing that will change it now is if we continue going higher and we get a reclaim of the 3-day 50 moving average, which is about $19,800, and it would also mean a reclaim of this level. So if for whatever reason bulls can step in, or whales can pump the price during this low liquidity and they can get it back above the 3-day 50 moving average, that is when we can start to consider getting more bullish, or I will personally anyway. Until then though, I think especially based on last week's candle close, I think it's likely we're going to see more downside and potentially even to fill this $12,000 fair value gap, which I would actually like to see, because even though it would mean price go down in the short term, I think it could be a more bullish thing to potentially end the bear market, because as you can see, we are starting to see a bullish divergence here on the weekly, right? We have lower lows in price, but higher lows in the RSI. Now, this could have 3 touches. So what we could end up seeing is we could perhaps end up seeing something where it creates a 3rd touch, it kind of moves lower till it finally gets there, and then starts to move higher. Obviously, that's a very bad drawing. But basically what I'm saying is we could complete this bullish divergence on the weekly in a way like this, where we get one final tap, one new lows, we fill the fair value gap, we hit that support, and technically that would all be a very good case for creating the bottom of this bearish trend, in the same way that we got this bear divergence over here, you can see, and that marked the top over there. Now we are getting the inverse, but it can take time to form, and it could potentially still take quite a few more weeks to form here, and could see us to new lows. And like I said, fill the fair value gap, hit that support, create the bull divergence, and then hopefully start moving higher. I think that would be a good setup to watch for, potentially for the bottom. Okay, so what we're looking at here is the Ethereum chart. You can see on the weekly we're at 1180, and you can see here very clearly what happened is we went to retest the 200-week moving average here in red. It touched it from below, it rejected once again, closed with a nice red body down here. So this is bearish, most likely results in bearish continuation to the downside. And this is also something I've been saying for weeks now. The price of Ethereum has not yet retested the June lows, whereas Bitcoin is already trading below the June lows. Okay, so what this means is that it's very likely that Ethereum is lagging and that it still needs to play catch up, and that I think we are at least going to retest the June lows. So that's about $900, but it could be in the zone. You can see there's a fair value gap here, so it could be somewhere between $700 and $900 as a retest. But obviously if something else happens or things get really bad in crypto or in the global financial markets or whatever happens, there is still potential for, in an extreme case, for us to sell off to this area, which is between $300 and $500. And that would be very extreme, but at the same time, it would actually match the 2018 drawdown from peak to trough in Ethereum, which was also over 90% back in 2018, which would match if we got somewhere between $300 and $500. So I'm not saying it's absolutely going to go there, but there is a possibility that if things get really bad, it could. My opinion, likely we retest the June lows somewhere between $700 and $900 over here, and the only bullish type scenario is if we can get back above this 200-week moving average that we were rejected from. If we get back above there, we get a weekly close, even better 2 weekly consecutive closes above 1360, then we can start to consider maybe a more bullish scenario. Until then, the risk of downside continuation is likely, in my opinion. Let's have a quick look at the S&P 500, which also had a very bearish rejection from the 50-week moving average here in blue. As you can see over here, we got rejected from it over here back in August, and it resulted in a major sell-off to the 200-week moving average here in red. We got this nice rally over the last weeks, and it went to the 50-week moving average, and once again it got rejected here, which is not a good sign for the bulls. The bullish case would be flipping this, getting back above this, because then it could lead us for a rally to potentially the all-time highs or beyond. But getting rejected here is not a good sign. That was a bearish, very bearish candle here again last week, and now we have to wait and see how low are we going to end up going. Are we going to retest the 200-week moving average? And if that holds, obviously that's a good thing for the bulls. If we break below the 200-week moving average, things start to look very bearish for the stock market, and we potentially have to start considering a repeat of the 2008 scenario where it crashed another 50% from below those 200-week moving average. So let's see what happens in the next couple of weeks. These averages are important, and as you can see, they're getting closer and closer together. So at some point, we are going to get a break in a direction, whether that's to the upside or to the downside, and then we have to adjust our plan and our strategy and our outlook according to what the charts are telling us. Now the Dow Jones Industrial Average looks a little bit different because it actually managed to reclaim the 50-week moving average, which, if you look back in the chart, actually was bullish most of the time. You can see over here, when it crossed the 50, it led to a new all-time high. It crossed the 50-week moving average, new all-time high. Crossed the 50, new all-time high. Crossed the 50, new all-time high. And now we crossed the 50 and we are right back on top of it. So the question is going to be, what is about to happen? And we just have to react to what the market is going to show us. Because as you can see over here, the last time, once it broke above it, it did retest multiple times before eventually starting a major rally to the upside, right? And you could see this process first, it wicked above it, and then this process took from July over here to November. So for quite a few months, it actually just hung around in a range before moving higher. So we have to see, was this a fake out? Does it sell back off? Does it close below the 50? And does it get below the 200? Again, just like with the SPX, If it gets below the 200-week moving average, things start to look very, very bearish, and that is when we could potentially have a repeat of the 2008 crash. If we just hang around here and we don't really get below it, it could be a consolidation before moving higher. And, you know, if we do drop but we still hold the 200, it could still be a pullback, and then it could still go either way. So we have to keep an eye on how this develops, where it ends up closing in the next few weeks, which averages end up holding or breaking, and from there we can choose more of a direction. Again, like I said, we are closing in on the holiday period, the last 2 weeks of the year, so usually that means a lot of people stop trading, the institutions, the funds, and the liquidity becomes thinner. So either, you know, we tend to just go sideways for the next couple of weeks, at least the holiday period until the new year, or this could be used to manipulate the markets and have a major move in a certain direction. So time will tell what that is going to end up being. And then finally, what is also important is the dollar index. And as you can see over here, we have had a major pullback in the dollar index after that insane rally. And what happened during this pullback is obviously we saw this rally in the stock market, and that is what got the Dow Jones back above the 50-week moving average, and the SPX, we got a big rally. But now we are at a very strong support, which is horizontally these previous two tops over here, but it is also the 50-week moving average. And as long as we're staying above this 50-week moving average with the dollar index, it could mean we could bounce here, continue to the upside, which would put downward pressure on the stock markets and crypto markets. So it's very important what is going to happen here with the dollar index and how it's going to end up closing in the next couple of weeks. Because as you can see over here, back in 2017, once we started closing below the 50-week moving average, we got a new multi-month downtrend in the dollar index, which was the 2017 bull market. Same thing over here in mid-2020. Once the dollar index got below the 50 and started a new multi-month downtrend, we got our entire 2020-2021 bull market. So now we are watching for what is going to happen. If we can break below here and get a new multi-month downtrend in the dollar index, it's likely that stock markets and crypto markets could actually end up going higher. But if we bounce here and we start a new leg up and potentially even higher than these previous highs, it's going to continue to put downward pressure on the stock markets, on the crypto markets, and that is maybe even what could cause a further sell-off in the stock markets, and maybe even a repeat of that 2008 crash scenario if we do continue getting a major move to the upside in the dollar index. So again, this is also something important to keep an eye on. Keep looking at these weekly closes and let's see what happens. Do we end up bouncing here or do we break below? For the bullish case for stocks and crypto, we want the dollar index to start a new multi-month downtrend, to get below the 50-week moving average, to get below this horizontal support. That would be ideal for the bullish case for stocks and crypto. But if that doesn't happen, we could still be looking at more bearish pressure. So I want to wish you a very happy holiday season. Merry Christmas if you celebrate it. And for the rest, just take some time off from the charts, from the screens. The markets are still going to be here next year. But like I always say, every day that passes is one you're never going to get back. So please enjoy these times now. Spend time with friends and family. Eat good food. Relax, de-stress. Spend some time in nature. Do what you enjoy doing. And then next year we can come back at it. We can go at it full speed. We can try and do our very, very best to extract as much money from these markets as possible. But for now, enjoy the holiday season. Enjoy the last 2 weeks of the year. This might be the last video of this year that I make too. So in case I don't make another video this year, happy holidays, and I will see you in the next video.